Welcome back. It's been a few months since the last video has gone up, somewhere between 2 and 3. I'd like to give you guys an update on what's going on in the portfolio, and hopefully soon enough we'll start getting into a little bit more. But lately I've been really busy, and as such, I haven't had the time to upload anything. So here it is. Here's an update. Let's pop this guy open. Voila. What you're seeing again for the folks, slow folks in the back who haven't seen this before, is my portfolio management sheet and the current standings in it. All of these are my positions currently in. I am very heavy to the short side, extremely heavy, currently 85%, but that's going to be short-lived. I'm actually taking down the long exposure tomorrow. I just wanted to cash in a little bit more on today's slide. The market's been on a downward trend for a while now, but today was a very good move. Last Friday was a very good move. Today is September 26th, and this is where we're at. It's been a rough last 3 months. I'll show you a representation of it right over here. I mean, June is when the last video was in. It was around here or whatever. I can't remember what time it was actually at, but that's the overall trend in the portfolio. There's been a lot of volatility ever since I started playing with the options. And I've been utilizing those a lot more and more now because the money just moves faster, right? And it's in an upward trend, which I'm pretty happy about. I did take down heavy exposure today, around $1,200. This was 5 closed trades, pretty much the long exposure. They were all in minus, but like I said, I'm always long and short, and just because one of my trades is going bad, it's not necessarily a bad thing. It's just a hedge against the big market jumps and drops. It's called hedging. Look it up. Uh, so where we're at is we're at 18.6% for the year, since January 12th actually, so 9 months. And the S&P in the same time has returned a negative 24.17. That's pretty much since its cycle high. Since the market started dropping, I've had returns of almost 19%. There, that's pretty good. But it's been choppy. I wouldn't say it was a smooth ride. There has been the July right here, and that was painful. And then there was a little bit of August, but I repositioned. And now I'm pretty much 85% short, which is crazy. I gotta hedge it all out or take down some positions. And what I will be doing is I will be taking down the short positions, the Microsoft, the MicroStrategy, and the IWN, which is that's an index. So I'll be taking those down tomorrow, probably sometime during the day. We'll see what the market does in the morning. It's been pretty wild lately, and with the VIX above 30, which it has been now. I mean, this is still last Friday's data, the 23rd, but if I go to refresh this, it's way above 30 today. So with the VIX above 30, we need to take down exposure. We need to make sure we're properly hedged, and by tomorrow I will be. Just like I said, I got greedy on something and I just want a little bit more out of it. So I did take down, see it's in 32.26. Anything above 30 is very dangerous. Anything below 20, it's very slow going. Here is where all the action happens, and this year so far has been great. What I'm talking about here, though, is that we are in danger town right now, and not paying attention to the VIX is dangerous for portfolio management. And when that happens, you have to reduce exposure and sometimes even just completely stay out of the market. That's probably the best advice I can give you. Whenever it's above 30, just stay out. When it's below 20, it's going to be slow going, so just pick something and invest in longs mostly, but still hedge. Anything in between 20 to 30 is where you make money. So far this year for me is 18.5%, which is freaking awesome. To the yield curve. For anybody who doesn't know this is the yield curve between the 10-year bond yield and the 2-year. What you do is you take the 10, you minus the 2, and it gives you a ratio. And there that is right here. This is the last few months this year, just zoomed in right here. And currently we're at minus 39. We've been negative since July, early July, and it's been inverted. When this happens, inevitably, and it's like, I don't know, 9 out of 10 times in history, if you go back in the Fed data, this will show you that this leads to recession, especially if the Fed is tightening, which is exactly what they're doing. So that should be interesting. It's not a good time for anybody out there. People are losing money and they don't know about it. It's just dissolving in their pockets right now. It's crazy. The US dollar has been on an upward trend. I mean, I'm sure it's got new fresh highs this morning and this evening, sorry. Let's look it up. 35.92 was my last reading on Friday. We are at almost 37. So that's good because, I live in Canada and my portfolio is in US dollars. Makes me very happy. Anywho, gold. Gold, our beautiful hedge against market crashes and things. It's not performing so well. So I took my gold exposure down. Um, it's the bottom's falling out on this thing. It's the only thing I can say. I mean, we got new fresh lows here, and 1637 is what we closed in at today. Silver's been pretty much doing the same thing. Copper, oil. All the commodities are dropping. Actually, I'm interested to see what the oil's doing. See what the oil did today. And this will give us that. It did another 2.5% or 2%. Funny that my gas outside is going up still while this thing is dropping out of the sky in a straight line since the end of June, or mid-June, sorry. Let's just go quickly through all my positions here. This is my UTZ against the KSS. Look the companies up. I don't have time to explain right now. But this essentially is long and short option position. I have well, they're both long. They're long calls and long put because I prefer not to sell. That's a recipe for disaster for a small guy like me. So what I do is I go long a call and long a put, and these are the prices now. This is my entry price, and that's the current profit. The expiry, or the next option expiry, because I have tranches which I could fill in with more options and just buy on top of what already is there, and then all of that will add up here, and each separately could be making money or losing money. Like this one's losing 98, but this one's making 230. That's why you have a long and a short, because if the market crashes because there's a nuclear disaster somewhere, then one of these is going to go down heavily, and so is the other. The one that you're long is going to start losing money, obviously, and it's going to end up expiring worthless, while the other one is going to keep going, and it's the lower it goes, even if it is like a 50% drop, the more money you're going to make, because it doesn't have a sell on the other side to limit the potential on it. So going long calls and puts can be explosive when there's a catalyst around, like VIX above 30. So I'm long some things like UTZ and Playboy, and I'll show you what I've done with Playboy. So somebody who's been watching this channel for a while, you know that I've had Playboy for a while in my portfolio, and I still do, but I repositioned it. But anyway, overall, this pair here, I'm fairly happy with it. The prices are moving in the right direction, as the ratio shows you right here. These are the prices, and as long as the ratio is growing, that means the gap between the long and the short price is growing as well. And if that's growing, then my profit is growing. And currently I'm at $132. Here's my Playboy PEB. I've actually bought a Playboy way out. I mean, the expiry on the Playboy is 2024 in January. It's got 480 days left. I bought that because I got in a strike of 2.5. Currently, the price is around like 380 or something, 390 adjusted close. Um, and I believe this company can go higher, but it's going to happen post all this crap that's been happening with the economy and the globalists trying to destroy everything. So pretty much, I know that this is going to go up eventually because their numbers are good. They've expanded. They spend a lot of money obtaining other sources of retail. You know, they've bought stores, and then all this crap happened. And I believe once it's all through, said and done, and that is, and once we're through this financial crisis, which is, you know, it's been here for a while now. It's just we've been lied to essentially. Once all that's said and done, and it will bottom out and it's going to turn, the Fed's going to start doing some quantitative easing. They'll start printing money, one, and they will start lowering the rates. There'll be a difference in gold, and the dollar's going to start going down. And that's when you know it's going to turn around. Just an FYI. Repeat that, write it down, and remember that. Okay? My short to Playboy, this PEV, it's the Pebblebrook guys. That's working out phenomenally on me. I mean, that it will go into 300% profit. Like if I look at that, I think I'm over 200 on the PEB. PEB, the return right now, sorry, not 200, it's 177. When I get 300% return, I will automatically be closing that trade because that's a 3-to-1 and that's the ratio that I'm going for with the options. What I mean by that is that if I were to put up $100, every time I put up that $100, I want to make sure that the value of my option at the end of the expiry is going to be 400 or earlier, but 400. I want to make 3-to-1, so I want to make 300 on top of the 100 that's already in there. So that's basically the idea. And then as you can tell here, my allocation is long exposure is only $1,000. I only have so many things long right now. I took it all down, but I have $6,000 in short exposure due to the fact that I still have these stocks selling, and those are naked sells, and I don't like those. As much as I want to be short everything, let's say Putin stops any more fighting in Ukraine. He feels bad about it, and he apologizes, and it all stops tomorrow. Well, certain things are going to rally like the British pound, the euro, the yen, anything against the dollar, right? But I don't see that happening. I mean, Putin's not going to come and kiss nobody's feet. So, good luck. What I see is WW3 coming. Unfortunately, as scary as that sounds, that's what I see. Every time there's financial instability at this scale, we end up in world wars. And literally, the first world war is right after the creation of the Fed, which is another thing. I mean, that's crazy. And what am I getting into here right now? But that's it's common knowledge. Open up some books, people, and see that private entity is controlling everything about your life. That's a scary thought, but that's exactly what it is. Yeah. So let's go through. Go. This is I forget what these guys are actually. I just like their numbers. It's been around since last month, and I already forget. I just like a company's numbers, and I go with it. I bought the option, and it's gonna go, or it's gonna it's got another 25 days to expire. I'm currently losing $172 on it. Still got I don't know $23 in there. So the most I can lose on this is $195 plus some commission or whatever. So I don't care. It's a bet. But if I were to win on this, I want, I want to see $800 value. So it's a 3-to-1 for me. So it's a 3-to-1 return against the risk that I'm taking. So you're trying to make $600 here and still keep your $200. STKL. I've spoken about the tranches, and this is a long only position. I've actually taken down the short that I had over here. It's a big time loser. It was working out pretty well, but then July happened and whatever. I took some exposure down by taking the stock off, by taking some money in, and that was pretty good. I took a small profit on that. But these guys here, I've taken some options thinking that it's going to keep going, and then we had a choppy market. It's not going anywhere, so I might be losing my whole investment on this one, but it's whatever. It's $500, and currently I'm losing most of it, which I could lose another 70, so 570. Does it hurt me? No. What I have over here is I have 4 options. I have a 1. It was doing really well, so I bought another 3. Just I got greedy. I should have just opened up another one. But whatever. You will never get anywhere if you don't take any risks. Let's just leave it there. So you take them, and if it works out, it works out. If it doesn't, it doesn't. Don't look at the profit over here. That's just the price of STKL going from 0 to 8, and that gives you the P&L. But this is not being used here. I'm actually using the options on this. And yeah, that's my Microsoft here. Microsoft, I'm making $58 on it. I've had this for 130 days, and this is why I'm doing options now, because I've had this stock for 130 days. I've held it. I have 4 shares, and I made $60 with it. And I've invested $1,000 worth of exposure in order for me to hold this position. It's gone absolutely nowhere. Um, you know, it's gone from 252, it's gone to 237. If this were an option, I'd be making like, I don't know, somewhere $1,700 on this if I kept it going, if it was that long, if the expiry was still out. But otherwise, you see the difference. You hold on to the stock, you have more exposure, and it's a good way to park your money, but you have more exposure, and you're not winning that much. It's only $60 after so much time, like 130 days. It's crazy. This is MicroStrategy. This one went against me. I don't know. This might be one of them that I didn't want to close, but by taking it down now, I'm not chewing into any of my profit. My earning curve still stays the same. They're hedges. Entire trade is a long and a short. A hedge gets taken down. It doesn't drop just because I closed 1200. Doesn't mean that that all that money and all of a sudden I'm gonna have a huge spike down. No, those were hedges, so they were already accounted for. And as soon as I take those down, my floating P&L goes up. And you can see that going from 200 minus 214 to a positive 1233. Just because I took that down. It was in there. It was already a bunch of losers. And then I left the winners behind, and then some things that I still feel greedy about, didn't want to take it all down because it's a big loss so far on some of these, and I'm trying to gain as much of it as I can. Seeing that the market is dropping, I might as well go for it. But I will be taking down the MicroStrategy and the Microsoft and the IWM tomorrow. They're just not going anywhere, and why am I going to hold on to it and keep all that exposure up? I might even take down the Qs. That's one with the $100 in profit there. I've held on to that for a very long time, and for it to make only $100, it's not even worth the time. So 118, and my next trade in the Qs will be an option. So watch out for that. It's coming. I promise to make more videos. We'll just find time, I guess. Um, Funny thing, I've been offered to collaborate with somebody actually. I've just got into that email and okay, I don't see why not. I just need to reach out to these people. Unfortunately, I don't check this mailbox that often. So, yeah, I'll reach out to you soon. If you see this video, you know who I'm talking about. 327. This is my junk. J and K. That's also an option. It's still got 25 days to go, and it's gonna make a little bit of money in the very least right now, unless it turns around if Putin stops the invasion or the war. But it could go in completely the opposite direction as well. High yield growth bonds, HYG. I've held that for 42 days now. And just look at the difference, the options. The risk on both of these put together is around $380. Okay. The risk on a single or on this QQQ that I bought or sold, sorry, the Qs is around 900 bucks. That's the difference. You're taking a chance to make a lot more money because I can make a lot more money with the options versus taking a little bit. Like the profit on this is 346. And I still got 25 days to go on these. One of them expires further than the other one. This one expires in November. It's just that stuff gets formatted. You don't see the dates, but they have different expiries. The next expiry is in 25 days, but the one after that, which is already worth 250, it's in November. This could be worth over $1,000 easily by the end of this expiry, or it could be worthless. I don't know. But we're throwing some darts at the board, and eventually one pops the balloon, right? And when it does, it's a 3-1, 3-1 at least. Unless I let it keep going because, hey, I got another 20 days till the expiry, and the trend is on, and it's dropping fast because most of these are short. If you look at my 3 jets, that's making $462 in 18 days. And I still got 32 days to go on this. These are 3 options. So I'm just short that stuff. Anywho, this is where we're at. The update is complete. Short video, very boring, but I know some of you are out there and watching this stuff. Just crazy. I thank you. And stay tuned. There's more stuff coming, I promise. Talk to you soon.